Energy stocks were some of those stocks that dropped yesterday after President Trump announced the end of stimulus talks. The sector has faced multiple headwinds this year, including limited demand, volatile prices, and unpredictable weather. Joining us right now, our first newsmaker of the hour, Chevron CEO Michael Wirth. And Michael, it's been a while. It's really good to see you this morning.
Becky, good morning. It's good to see you too.
Let's talk a little bit about what the market's reacting to, the idea of whether or not there's going to be a second aid package or an additional aid package coming from Washington. Obviously, oil prices fluctuate quite a bit and they move on a lot of different things, but demand has been the big overwhelming issue that we've been facing all through this year as coronavirus shut down economies and slowed down demand in other places. I just wonder what it looks like from your perspective right now. What do you think is happening in the world and what does the demand picture look like?
Well, demand seems to really correlate with the status of the pandemic in different regions of the world. In Asia, China, for instance, we've seen really robust demand recovery, less so in Europe and North America, and it can vary by type of demand. So air travel continues to be at very, very low levels. So the demand for jet fuel globally is significantly below levels that it was at before the pandemic. Gasoline has come back reasonably well in most places, although you still have a lot of people working from home, less commuting. An offset is less public transit as well, and so a little more driving to offset that. Diesel demand has stayed firmer throughout this. So we're still in I would call it a variable kind of state of the recovery and well below pre-COVID demand levels, which I don't think we'll see a full recovery until people have confidence that the pandemic's under control.
Well, that's what I wanted to ask you about. This week, Boeing lowered its demand outlook for its planes over the next decade by 11% because of the repercussions of COVID and people not feeling comfortable going back into the air again to fly. I know that you guys took a big write-down in your last quarter, something like $1.8 billion or something for a lowered outlook for commodity prices. Is this the type of thing that you think is going to last for years, even potentially a decade too, or do you see everything outside of airlines kind of bouncing back quite a bit sooner?
Yeah, there are different opinions on that, Becky. Our view is that we've seen a substantial amount of the recovery that was, I'll call it the easier return of demand that's already occurred. And what remains really is that more difficult demand, the demand that's much more sensitive to concerns about the pandemic. And our view is that vaccines are likely on the way, and that as those begin to be deployed more broadly, you'll see people resume movement and behavior that looked like a lot like what it was pre-pandemic. But this is, we're still talking a number of quarters, well into next year most likely, and we think that commodity prices are likely to be pretty choppy and volatile along the way. There's still a lot of supply that can come into the markets to meet growing demand. There's a lot of excess inventory that's built up around the world. And so before we see energy prices really firm in a way that's durable, that excess supply needs to really start to match up with demand better.
Shepard Smith here. Thanks for watching CNBC on YouTube.